In just a few hours, silver prices have exploded to an all-time high, surpassing $58 and rising over 100% within a single year. But what's behind this staggering surge? A mysterious 10-hour COMEX glitch, suspicions over 400 million ounces of silver unable to be delivered, the Fed preparing to unleash liquidity, and even JP Morgan unexpectedly moving its gold trading desk to Singapore. What is really happening in the silver market, and how high could it go? Silver is entering an unprecedented boom phase, climbing straight to $58.55 per ounce, officially marking the highest nominal price in history. Just today, silver jumped more than 3%, and looking at the broader picture, it has risen over 100% since the beginning of the year, making this the second best year on record for silver in the history of precious metals. This surge has not only surprised investors, but also shaken other major asset markets. While gold has also seen a significant rise, the standout factor is the gold-silver ratio, GSR, which has fallen to 72, the lowest in 4 years. This indicates that silver is outperforming gold, reflecting strong demand and a shift of capital into the white metal. Meanwhile, the USD is weakening, stock markets are declining, and crypto is deep in the red. Bitcoin, often considered a rival to precious metals, has fallen around 9% year-to-date, completely outpaced by silver's meteoric rise. As a result, money is flowing away from riskier assets toward perceived safe havens. Another notable point is that silver's market capitalization has surpassed Amazon, moving closer to the top 5 most valuable assets in the world, while Bitcoin has dropped to 9th place, highlighting a major shift in how alternative assets are being valued. Behind silver's acceleration are several macro factors. Today marks the final day of the quantitative tightening cycle, and from tomorrow the market will enter a phase of liquidity injection, with the Fed potentially returning to quantitative easing in 2025. Forecast models also show an 88% probability of a 25 basis point rate cut at the upcoming Fed meeting, a very positive signal for both gold and silver. The 10-hour COMEX glitch has become the most controversial topic in the precious metals community. CME Group, the exchange operator, claimed the cause was a cooling system failure, causing servers to go offline. However, many veteran traders were skeptical, noting that large data centers always have backup cooling systems, and for the entire system to fail for 10 hours was almost impossible. Suspicion grew because the glitch coincided with a highly sensitive event. An authorized participant, AP, was reportedly required to deliver 400 million ounces of physical silver, an enormous amount that could have shaken the market if delivered immediately. This led to speculation that someone pulled the plug to delay the trade, avoiding a potential delivery default. During the 10-hour freeze, major institutions allegedly used the rare pause to review margin levels, rotate capital, restructure, or roll short-long positions under pressure. For many large traders, this was not just defensive action, but a survival effort to avoid financial death if silver prices continued to spike. When COMEX resumed operations, several measures were immediately implemented: tighter trading limits, higher margin requirements, adjusted trading mechanisms to slow volatility. These actions further fueled belief that the glitch was not merely technical, but an emergency control to stabilize the market in a sensitive moment. While derivatives trading froze, physical silver trading did not stop. Bullion premiums continued to rise. Miners, refiners, and industrial buyers traded actively through private channels, showing that demand for real silver remained strong, regardless of paper contracts. All eyes are now on December 31, 2025, when many large positions will mature, forcing the market to settle in real metal. Many believe this will reveal the truth about the market's transparency and the system's actual delivery capability.
Another point fueling speculation is that JP Morgan unexpectedly moved its entire gold trading desk from New York to Singapore, coinciding exactly with the day of the COMEX 10-hour glitch. The perfect timing cannot be ignored. Many are questioning whether this was just a routine strategic decision or a move to prepare for major market disruptions in precious metals. While no official explanation has been given, the event is certainly not viewed as a coincidence. 2025 has seen a spectacular breakout for silver as it continues to shatter records previously set in the market. First, the new nominal price record reached $58.55 per ounce, officially marking it as the highest daily price in history. This figure has astonished investors and led many experts to reassess silver's long-term potential. Beyond daily highs, silver also set a record for annual average price. The 2025 average has exceeded $40 per ounce, surpassing the previous record of $35.56 per ounce set in 2011. This is the first time in history that the annual average price has reached this level, demonstrating sustained growth throughout the year. Annual growth is equally impressive. With roughly 100% year-to-date gains, 2025 ranks as the second-best year ever for silver, only behind 1979, when the Hunt brothers drove a staggering 434% increase. Compared to typical years, this growth is remarkable, especially amid global economic volatility. Looking forward, silver has even more ambitious targets ahead. Adjusted for inflation via CPI, silver could potentially reach around $145 per ounce, an almost unimaginable figure, yet entirely possible if current trends continue. These records not only underscore silver's strength in 2025, but also signal that the precious metal is still in a powerful upward cycle worth monitoring closely. 2025 has truly been a breakout year for silver, one that even seasoned investors could hardly have predicted. From a starting price of around $30 per ounce, silver has surged past $58 per ounce, setting historic records for nominal price, annual average price, and year-over-year growth. These numbers have not only energized the precious metals market, but also drawn global investor attention. The author expresses keen curiosity about how high silver could go next, questioning whether this meteoric rise will continue. At the same time, viewers are invited to share their predictions, opinions, and personal insights, creating a forum to engage directly with this exciting story of silver's unprecedented surge.